All right, the highlight video here from May 15th, Greatstockpixcom live trading chat room. Man, the power of teamwork. Big Idea is one of our all-stars. He was watching this SPWR because of the gap up on news this morning. And these are 5-minute candles. He just called it long over this base. His long idea for the room was 20.76. Worst case stop about 20 cents below. There's the trigger. Next thing you know, we're through the high of the day, and the thing maybe doesn't look like much there. It was a huge move though. 20.76 went to 22.38, $1.62 in our favor on about 19-20 cents risk. Great call. And while I'm talking about big ideas, I got to share this one. This was actually a blunder by me. I was looking for a turn in HFC right in here. Refiners were strong. This had made a nice move and was coming down between these two green lines. Is kind of one of my buy zones, and I just didn't get the turn there. I can't remember. I think the stop, hold on, was 18 cents below, but I did the entry and stop. I did get stopped out there, and then this thing continues to fall. I said in our wrap-up video today, well, if I did anything right, I at least put HFC on people's radar, because this purple line here is the 200 period moving average, and oftentimes you'll see stocks bounce nicely off of what we call the 5-200, meaning 5-minute candle 200 period moving average. And Big Ideas, when it looked like this, said he was looking to enter at 46.74 right there. Whenever we do that, and we teach this in chat, whenever we buy on the way down into one of these moving averages, since it's not moving in your direction at the time, in other words, if you're bidding at the moving average, I always condone an arbitrary 20-cent stop. In other words, you can't just take it here. It could just be starting to tank. You never know, so you always have to have a stop in mind. And my idea has always been kind of, if you're trying to buy it at a moving average on the way down, use a 20-cent stop. So it'll have to come through there and go down another 20 cents for you to be wrong. But look what happens. 47.64 was his entry. It went to 47.63. It doesn't get much better than that. And look at the bounce. From 47.64, it went to 48.77. And at no time were you ever underwater. Just turned right there. I mean, what a great call. And a cool idea using the 5-200 there. Stephen B., one of our all-stars. CTSH. Really beaten up stock on the daily chart. But you see this volume spike here? These are 5-minute candles. This was this one with the big topping tailor. This was the opening candle for the day. So this was all yesterday's trading. But this volume spike, I believe, is what put this on Stephen B.'s radar, coupled with the fact that it's really beaten up on the daily and was pretty close to a double bottom on the daily. So he called it long over this candle, 62.26. And so basically, right, if it gets up to there, and the worst case stop at the low of the day. So 26 cents risk. There's the stop. Let me scroll across for you. So there's the trigger. Next thing you know, we're through the high of the day, flagging, and then before you know it, this thing just got silly to the upside. And what a great call. 62.26 entry, 26 cents risk. It went to 64.90. It made a $2.64 move in our favor on 26 cents risk. Stephen B. doesn't get much better than that. What a call. Dana, one of our all-stars, called FIO. It had an early strong start, came back down, and she called it over 1540 with a 20-cent stop. So you can see the entry. I mean, this thing just took off. It went straight to 1590. So basically a 50-cent move on 20 cents risk that never was really in danger of getting stopped out. You can see it gave it away later, but we teach our members, if you're in something and you get a move like this, start scaling out. Don't get a calculator and start thinking how rich you're going to be. And then JC Penney's was one of my calls. I call it simply as a high of day break. I posted this one on Stock Twits as well in real time. My idea was just a break of the early high, 1896, because you had yesterday's high there, and if I pan out a little more, the gap up high from 2 days ago. Okay, so you have what we call stacked catalysts. All right, there's the high from the gap up day. There's a lower high. There's a lower high still. So if you get through the high of the day, light up the new high sticker, probably going to take out all these highs to the left, right? And JCPenney's has a lot of shorts in it. So there's the trigger, and we got a nice climb all the way up to 19, whatever it was before the end of the day, gave it all back. But I was using my 520 for when to sell. So I didn't get all of the move, 1896 entry, and got stopped out around whatever this was, 1920, close to 1930. So it wasn't huge, but it was a nice trade as well. Another suggestion I had in chat was Blackberry today. Blackberry, BBRY, pretty beaten up yesterday, and then we gapped down. And I like that scenario because generally, if you break the high of the day after a big sell-off and then a gap down, you usually get a nice move. So when it looked like this, maybe one more candle here, I typed in the chat room, Blackberry high of day break might find some buyers, which would be 1496 if it gets there. Put a little line there. So there's the high of the day. My idea was just over the high of the day. I said might find some buyers. If you're going to stop it, I didn't give out an official stop, but it would be below the most recent low. So maybe 15 cents risk. And look what happened. Real nice move. Doesn't look like much again because it was so beaten up yesterday, but from 1496 pretty quickly to 15, whatever it was, 1542. And that was easy money. And Blackberry is plenty liquid. You could add as many shares as you wanted. Pretty easy trade there too. Can't say enough about the room. Teamwork in there is unbelievable. I will quit babbling and we'll see everybody tomorrow.